Do you understand technical and fundamental analysis, but still struggle to make money in the markets? Can you see setups form, but you're still struggling to make money trading those setups? If so, you'll want to watch this entire video. In this video, I'll discuss how you must structure your trades, your thinking, and some of the most important areas of focus in regards to performance and execution. Okay, we're gonna go back to a quote from Mike Bellafiore, and I wanna emphasize this point because this is one of the areas that I was weak in when it came to trading. And it's because I never really realized why or how important it was, right? So he says, trading is as close to being a professional athlete as I can think of. You must be well rested. Your performance changes from day to day. Trading, like sports, is performance-based. Traders who trade well, just like athletes who play well, are paid more than they deserve. So again, when it comes to performance, pulling the trigger. Again, when it comes to performance, pulling the trigger on your trades, it is very important because no matter how much you analyze the market, how long you wait, when the setup appears, if you hesitate, if you are in doubt, if you have fear, if you have low confidence, if you decide too slow, you will not be successful. So in this video, we're going to talk about eliminating. Okay, we're trying to eliminate these things so that we can be CPTs who can make money. Now, the top areas that I'm going to focus on are trading with certainty. That's what we want to have. We want to have more certainty when it comes to our setups. We want to remove more of an emotional bias, right? We're not going to remove emotions totally because we're human. But if you trade with more certainty about your setups, about your edge, that's going to help you perform better. We're going to talk about under and over trading. So we oftentimes hear the phrase over trading, but a lot of times beginners are under trading the A setups. They overtrade the C setups and undertrade the A setups. We're going to talk about the importance of having good entry. We're trying to have the best entry possible. We're going to talk about having the best exits, as well as what I mean by exits, I'm talking about take profit exit and a stop loss exit. Both of these are exiting the trades. Okay. Sometimes we don't think about the importance of both. We talk about the stop loss, but the take profit is very important. How you exit and take profits are very important when it comes to performance and making money. And then proper and consistent risk. These are the areas that we're going to focus on. Now, how do we trade with certainty? Many people send me DMs and messages saying they hesitate on trades. They get frustrated because they hesitate. They get frustrated because the trade leaves without them. They're in Discord. People are in Discord asking, hey, what do you think about US 30 right now? And the reality is the first place that you should go to ask about a trade is the playbook. You should go to your playbook. You should walk over to the playbook and say, hey, playbook, US 30 is in a decline. GU is uptrending. AU is ranging. This is what is happening. Do you have a play that fits the current scenario in the live market? That's what we should be asking about. If you have not come to that point, then it's okay. You're still developing the playbook, but you should not be trading live. You can trade the demo, but your time is better spent working on the playbook. So developing certainty comes from having a playbook that you have validated that it has edge, okay? And you trading those plays when you see them in the live market. Another thing is what we've been talking about, the bar replay, getting those reps in, replaying the setups, getting those reps in increases your confidence and your competence. This is all like to be a top performer, you have to have high performance. You have to have high confidence. And the way that you increase your level of confidence is through reps. Reps. The more reps you get, the more confident you'll become. I never really imagined that I'd be trading US 30 the way I traded, but it's because of the reps. I used to see big traders trading US 30 confidently, calling signals, calling ideas. And the way that I got here was through reps, okay, and experience with US 30. Number 3 is the highlight reel. The more, as you trade in the demo, as you trade the challenges, the more highlight tapes you have, the more confident you'll become about the setups. When you can go and look at a particular setup and look at the tape and get reps with that tape, that will increase your level of certainty. which will increase your confidence and will increase the idea that you are a competent trader, right? All right. So these are 3 ways. I always talk about these 3 because they are so effective, so important. If you listen to the big names, the big traders, 8-figure, 9-figure traders, they talk about these things. These things have helped me tremendously. All right. Now let's talk about a good entry and exit. So a good entry gives you the price that gives you the least risk exposure and the highest possible R&R. So what do I mean by this, right? Let's take a look here. So if the red part where the red and green meets is entry, okay? So this is a large amount of risk. If you look at your trades and you have a large amount of risk, this is 1-to-1. What I believe you should be trying to do is figure out if you can reduce the size of this, okay? So you hear your 1-to-1. Is there a way to reduce to have a 1-to-2? I have less risk in regards to the area of risk, like less risk exposure, right? So I can risk 1,000 to make 2,000 here. But since I have more risk exposure here, I can risk 1,000 to make only 1,000, right? So if you can continue to reduce this down, this area, the amount of points or pips between your entry and your stop loss, if you're able to figure out through back testing how to reduce that, then there's a high chance that you'll have the possibility to get a greater reward. So at one point, my stop losses look like this until I started to understand the risk to reward and how a sooner entry, if possible, through back testing, a sooner entry will equal more money. So here, if I enter up here versus here, that's $1,000 difference. But if I enter lower, graphically, this probably should be a little bit lower, but you get the idea, right? If I enter lower here, between here and here, that's $2,000 that I left on the table if I enter it way up here. So what's in the beginning, it's okay. You may be in demo, you may just be getting used to the setups, but as you get used to the setups, what you should be trying to figure out is how to enter sooner with good confirmations, enter sooner at a better price so that you won't leave money on the table. Now, $2,000 for some people may say, oh, it's only 2,000. I still made 1,000. I'm happy with that. But think about this when this is 10,000 here, right? The difference between this 10,000 and gaining 30,000 is you're losing out on $20,000. That's some people's yearly salary, right? You can't trade like that. You can't. And as your numbers scale up to when this is 100,000 versus 300,000, you're leaving $200,000 on the table, which is unacceptable by anybody. It's unacceptable by any prop firm, any financial institution, that you leave $200K on the table when you could have, by refining your execution, by entering sooner, you could have made $200,000 extra, right? So having a good entry is very important. So this is things you want to pay attention to and watch as you are recording your screens. You want to figure out if there are ways that you can enter into the trades sooner. Now, a good exit, right? So your take profit is the exit that is most likely. A good take profit is an exit that is most likely to happen in the market before reversing. So what I mean by this is that if you're looking at a trade setup, we should be back testing our take profit, and we should know where the price will most likely reject, and we should base our take profit on those areas. Okay. So for example, how do we anticipate that? Let's say we entered a trade here. We entered a trade here. How would we anticipate that this area is an area that price can potentially reject from? We know that because we be looking at zones based on our back testing of zones, right? We know that this is a potential area for price to reject from. So therefore, if we enter the trade here, we will be placing our TP, our take profit, somewhere here, because through back testing, we noticed that at certain zones, price can reject. So you see price started to get weak here. It broke through, but price started to get weak here. That's just because certain zones will absorb the bullish momentum, right? We know that through back testing, right? So you want to make sure that you have a strong take profit. And then also on the flip side, your stop loss. My stop loss is based on my back testing. When I have certain candles form, when I have a break of structure on the smaller time frame, there are certain places where I'll put my stop loss based on me just understanding through my back testing where a decent stop loss would be. Okay. So you want to have both of these. Okay. So your stop loss is the price that invalidates the trade. So you don't have to have a big, massive, giant stop loss. You want to put the stop loss in a place where if it passes this area, most likely the trade is invalid. Okay. All right. Now, the benefits of a good entry are gives you a great R&R, makes you more money, gives you less risk exposure, right? And then the benefits of a good exit, as I just talked about, your take profit prevents greed and euphoria. So now sometimes, let's say we got into the trade over here. Let's say we got into this trade over here. Okay. Now, let's say we got into the trade over here. Now, if we did not have the take profit there, what happens with certain people is you see these bullish candles and greed gets in. You like, okay, I'm up $3,000, but what if I can just get a little bit more? Man, price is moving. You start to get euphoria. And you know that this is a zone of potential rejection, but greed gets in the way. Euphoria sets in. You start to get overly confident and you start to believe that you know what the market is going to do. So you hold on to this trade and you don't take profit, and then boom, price goes back to your entry and hits the stop loss, right? So having a good take profit prevents greed and euphoria. Some people just, they may let it run, but for me, the way that the market moves now is that it pulls back. So I would rather take profits out, and then if I need to enter again, I'll enter again, okay? And the take profit is determined by market behavior, not how you feel, right? So having a strong take profit that you've back tested will eliminate you making these subjective decisions that are based on feeling, right? And then the stop loss, the benefits of a good stop loss, it protects the account, right? Protects you from a bad marriage with the trade, right? You may marry a trade and be stuck in a trade while it's downtrending. You entered into a buy, it's downtrending, okay? But you can't see it. For example, let's say you entered into a sell position here because you were trying to, get into a breakout. Let's say. Now, let's say you entered here. Okay, I'm just using an example just to illustrate something. Now, price starts to go up. There's a break of structure here on the 4-hour, but because you're married to the trade, you don't see it. Now, if you had a stop loss, it'll take you out. But let's say you had no stop loss. Okay, you're in a trade, you have no stop loss. And as price goes up, it's just draining your account. And you've married the trade. So every time the trade goes down, you start to say, oh, you know what? Maybe it's going to come back to my entry because you see it going down. But in reality, it's uptrending. So it doesn't even make sense to think that. But you can get married to it emotionally. And every time it goes back down a little bit, you can start to hope that it's going to come to your entry until it drains you out. Now, this doesn't just happen to retail traders. There are many big traders who've lost hundreds of millions holding on to a position. So if this has happened to you, don't feel too bad. Okay. All right. Now, under and over trading. Let's talk about it. So under trading. Now, people fear loss, right? Even when people are up, they fear losing what they've already gained. So my advice to you is that you have to seize the A and A plus setups when they appear, because trading profits are not linear. It's not like a job where you go and get a paycheck. You expect a paycheck. That's not how the market runs. Even a normal business that may expect a certain amount of customers to come can expect some sort of consistency. But trading It's not as linear, right? Here's a quote from $1 Million Trader, right? So he says, these are his day trading profits from the past 4 years, right? 2019, 1.7 million. 2020, 2.1 million. 2021, 7.5 million. 2022, $1 million, right? And that's December 13th. So look at this, 7.5 million. There are so many there. This looks like there's so many more opportunities that he took advantage of here. And then his earnings are only 1 million now, right? So it's not linear. So you have to take advantage of the trades when they're there. So many people undertrade. They undertrade their A setups, their A plus. When you see those setups, no matter what, you shoot those because you don't know when they'll appear again. And then over trading, want to focus on that. We don't want to take C setups. If you're just sitting there, you don't see any real strong setups, you have to discipline yourself to not take the C setups. They will hurt the P&L. They will hurt your P&L. And then last thing we want to focus on when it comes to performance is proper and consistent risk, right? A rising equity curve is caused by consistent risk. Consistent, what I mean by consistently giving the same amount to A setups, consistently giving the same amount to B setups, right? And then also when it comes to the risk, this is another one I always talk about, is calculating your own lot sizes slows you down. Calculating and trying to figure out your lot size slows you down. Use an EA, use the trade manager, use Magic Keys, use one of the trade managers that you can find through the Meta Quotes website, the MetaTrader website marketplace. Those types of things you should automate. Hotkeys, entering to the trade with a good lot based on a certain percentage, all that should be automated, okay? And then calculating your own lot also leads to inconsistent risk. Many people try to do it. If you try to enter more than one trade, oftentimes you'll make a mistake. And you cannot afford to make big mistakes when you are risking 100, when you have a 100K account, 200K account, 300K account. Those mistakes can be very costly. So please, as you are developing your trading plan, when you're looking at what to improve, find out which of these you want to target first as you're working in the demo, or if you're already live, look at these. These are very important. Please leave your comments, questions in the comment section. Do your homework. See you in the next video.